Welcome to the weekend edition of the Fear and Greed Business Headlines, the week that was, a wrap of the biggest stories over the past week. I'm Aylmer. It was a big week for COVID cases, unfortunately. Big week for corporate deals, for share markets hitting new records, and of course, the Olympics. Let's start with financial markets. No one seems to have told equity markets about the latest outbreak of COVID-19. The S&P ASX 200 set several closing records this week, pushing beyond 7,500 points. There's been a bunch of reasons for that. Earnings season in the US and Europe have been strong, and that's reinforced confidence that local companies will outline strong profits in coming weeks. Also, there's confidence that the local economy will bounce back once the current run of lockdowns end. Throw in a fair splash of mergers and acquisitions activity and very low interest rates, and you have a recipe for share price growth. Wall Street has done well this week too, with the S&P 500 and Dow Jones Industrial Average trading around record levels. With around 70% of companies having reported June quarter results, nearly 90% have beaten profit forecasts. As has been the case for the past 18 months, the dark cloud hovering around markets is COVID. Case numbers are rising in the US and are now at their highest level in 6 months. European markets are in a similar boat to Wall Street, though the profit season hasn't been quite as strong. Certainly, markets are trading close to record highs. Oil prices fell for most of the week before rebounding. Gold is trading just above $1,800 an ounce, and the Aussie dollar is around 74 US cents. One X factor for global markets at the moment is the Chinese government. Well, it's always been an X factor, but right now it's more of a triple X factor. It's already cracked down on ride-sharing companies, e-commerce groups, and education stocks. And this week, it said it would more tightly supervise overseas share listings. Then a government mouthpiece talked about the spiritual opium and electronic drug of gaming, suggesting those stocks might be next in line. Spiritual opium, electronic drug of gaming. I like that. Anyway, I digress. That sent Chinese stocks on Wall Street and other bourses tumbling. Finally, commodity prices are higher, very high, but traders are becoming just a bit nervous. Copper, nickel, aluminium, they've all had good runs, but the rising cases of COVID, particularly in China, are starting to make investors nervous. Moving on to local news, by the end of the week, 15 million Australians were in lockdown across southeast Queensland, Victoria, Greater Sydney and the Newcastle-Hunter region in New South Wales. The COVID crisis shows few signs of abating, with numbers in New South Wales so high that an end to restrictions look unlikely anytime soon. There are more than 4,000 cases in that state from the most recent outbreak, and the number of deaths is climbing. The marked change from politicians this week as a result of the ferocity of the Delta strain now spreading was a shift from a zero-tolerance policy to a learning to live with COVID attitude. Eradicating COVID now seems unlikely, and modelling from the Doherty Institute this week showed that economies with a vaccination rate of 70% could operate without severe shutdowns. Certainly, the rollout of vaccinations has gathered pace, with more than 20% of the population now fully inoculated against the virus. Officials say everyone who wants a jab will be able to get one by the end of the year. The Reserve Bank Board met this week and upped its forecast for economic growth. It thinks the economy will expand at a 4% clip next year and 2.5% in 2023. Governor Phil Lowe repeated the forecast on Friday when he appeared before a parliamentary inquiry. The central bank believes that the economy should bounce back after these current lockdowns. Significantly, it said it would go ahead with plans to start scaling back its huge monetary policy stimulus, albeit slightly. Governor Lowe said that the economy had considerable momentum up until the current virus outbreaks, and government spending and the rollout of the vaccination program will help the recovery. Talk about steady hand on the tiller. Property prices in Australia have grown for 10 months in a row and across the country are up 16% on a year ago. We found that out this week, and that's the fastest increase in 17 years, according to CoreLogic. Overall, the pace of increases in prices has come off the boil, though Sydney remains strong. Will it continue? Probably not, with most analysts tipping price rises next year closer to 5%. Meanwhile, figures from the Bureau of Statistics showed that first home buyers were leaving the hot property market, but investors were replacing them. We found out this week that former Australia Post boss Christine Holgate will receive a $1 million termination payment. Remember, she left the business amid controversy over awarding 4 Cartier watches to senior managers as bonus payments. It triggered a parliamentary inquiry and plenty of criticism of the board and the Prime Minister. Aussie Post won't have to apologise, but will have to pay Ms Holgate's $100,000 in mediation costs. And this week, figures from the corporate regulator show that the big 4 banks, AMP and Macquarie, have so far refunded $1.6 billion to financial advice customers who were charged for services they didn't receive. This flows from the Hayne Royal Commission, and the scandal ended up costing several chairs and CEOs their jobs. In international news this week, the house price boom isn't only in Australia. According to the Financial Times, prices rose over the past year in 37 of 40 OECD countries. That's the most in at least 2 decades. It reflects low interest rates around the world, the desire to work from home, and savings accumulated during lockdowns, which have helped people build deposits. The resurgence of COVID around the globe continued, with Indonesia now a hotspot. In fact, Southeast Asia is perhaps the area most affected at the moment. The Delta variant is fueling a resurgence in the US, with 72,000 new infections per day. In Europe, the total number of recorded infections since the beginning of the pandemic passed 60 million this week. New York became the first city in the United States to require proof of vaccination for a number of indoor activities, including concerts, restaurants, and gyms. There was some good news, though, from one of the most troubled borders in the world. Military commanders from India and Pakistan said they'd had constructive talks and negotiations would continue. The most contentious area is the Western Himalayan region, which is incredibly beautiful and incredibly dangerous. There was plenty of corporate activity this week as earnings season kicked off. National Australia Bank announced the $2.5 billion share buyback. The banks have too much money, sort of. The banks, like other companies last year in the middle of the pandemic, raised money to cover potential loan losses. But the economy has performed so well, the money wasn't needed. And now companies and the banks want to give it back. Commonwealth Bank is tipped to announce a big dividend next week. The big miners are in the same position, though mostly because of high iron ore prices. Rio Tinto last week announced a huge dividend, and BHP is expected to do the same next week. The Board of Oil Search said it would recommend a merger with Santos to create a $23 billion oil and gas major after the latter upped its bid first made 3 weeks ago. The combined business will be a top 20 ranked company on the ASX, bigger than Woodside Petroleum. It will have operations in Australia, Papua New Guinea, Timor-Leste and North America. Late in the week, the Prime Minister of PNG suggested he may impose conditions on the deal before it can go ahead. The final submissions into the Victorian Royal Commission into Crown Resorts landed this week. The company knows it will be sanctioned, but it doesn't want to lose its licence, something that is a real possibility. Commissioner Ray Finkelstein refuted suggestions that cancelling the licence would have too much of an impact on Victoria, saying some other group would probably buy the company. Chair Helen Coonan has brought forward her retirement date to the end of this month. Woodside Petroleum, the largest oil and gas group in the country for now, said the cost of its offshore Scarborough gas development was projected to reach $12 billion. $12 billion for one project. Oil and gas is an expensive business. And I like the story this week about carbon farming becoming big business. In the past couple of months, Japanese conglomerate Mitsubishi has bought 40% of Australian integrated carbon. Another Japanese group, Mitsui, bought Outback Carbon, and a group backed by the government-funded Clean Energy Finance Corporation bought Climate Friendly. These farms are carbon offset projects that change land use or management practices to store carbon or reduce greenhouse gas emissions. It's a business of the future. Finishing with the Olympics, cracking fortnight to be in lockdown. It's Australia's most successful games on the field, but what grabbed my attention most was the spirit of the Olympics. From skateboarders hugging anyone close to them, imagine what it would have been like in a non-COVID world. Anyway, to the grace of US gymnast Simone Biles withdrawing from several events for mental health reasons, and the joy of the Italian high jumper and the 100-metre runner, both of whom won gold within minutes of each other. This has been a celebratory games. By the end of it, I found my competitive nature taking somewhat of a back seat and just enjoying what was going on. It has been cracking to watch. Now I get to the point in the program where I go through the biggest story of the week, the sleeper story, the most remarkable story, and my favourite story. The biggest story of the week came way back on Monday. Okay, COVID was probably the biggest story of the week, but this one comes in a pretty good second. It was the deal between Square, the payment system provider in the US run by Twitter founder Jack Dorsey, and local buy now, pay later group Afterpay. Square will stump up $39 billion for the local group, the biggest deal ever on the ASX. It's still got a few hurdles to clear, but the winners will be Afterpay shareholders, who have made plenty of money off that stock over the past couple of years. The founders of Afterpay will both walk away with around $2.7 billion each. They reinvented lay-by, worked out that millennials wanted it, and the rest is history. Good on them. The sleeper story of the week came from Apple. It wants to install software on American iPhones that scan for child abuse imagery. Okay, no one is going to argue against outing pedophiles, but the idea of having a very large corporate, not a government, a very large corporate spying on what I'm doing on my personal device is very, very concerning. There'll be much more about this story. The most remarkable story came from the federal government. It said this week it will establish a $380 million scheme for members of the stolen generation. It comes after several hundred members of the group launched a class scheme against the government. Eligible survivors will get a one-off $75,000 payment in recognition of the harm caused by their forced removal and $7,000 to support their healing. What's remarkable is it's taken so long for this to happen. We're talking 60 years ago here. Members of the stolen generation deserve much better than this. And my favourite story of the week was the one about payphones. There are still 15,000 payphones across the country, and around 11 million calls were made from them last year. There was a significant amount made to 000 and Lifeline. Telstra has decided to make calls from payphones free. Good on them. That's why it's my favourite story. And that's everything you need to know from the last week. I'm Aylmer. I'll be back on Monday morning with the Fear and Greed business headlines. I look forward to your company then.